And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. Happy Friday, everyone. November the 19th. I'm John. Thanks for trusting me with your time. As always, looking for context, good risk management, and patience. As far as economic numbers this morning, nothing very important here in the U.S., just a couple of talking feds. As far as other news, crude prices break to a 7-week low as apparently some full COVID lockdowns are being threatened in Europe. Austria, the first country to start talking about the complete lockdowns for the winter, so that should pull some demand away from crude oil, breaking down below the weekly kickoff low. Of course, we'll see that very shortly. U.S. stock indexes set to open mixed after the S&P and the Nasdaq overnight put in all new highs. The U.S. House of Representatives is set to vote on the Build Back Better plan. I tend to call it the Build Back Broke plan, but apparently that is up for a vote today. A little delay tactic yesterday, but we'll see if they can get that vote in today. As always, make sure you like, share, comment, question, feedback, and heckle at will. And subscribe to our YouTube channel. You get notifications when we do go live. Speaking of which, we won't be going live next week. It's Thanksgiving week next week here in the U.S. Going to be taking a little bit of time off, so we won't have a forecast or recap or a coach's playbook next week. I know I'll be missing you. This morning, looking at the VIX just a few minutes ago, up about 6% at 18.73. Dollar index up almost 0.5%, right up against that new 16-month high, 96.07. And the yield on the 10-year took a dive last night, 1.53%. So we're seeing some good upside move in the 10 years this morning. As always, we're going to take a look at those. Markets may be starting to somewhat come into a holiday way of doing things. Certain markets are inside value. Certain markets are opening out of balance. So it's going to be another challenging trading day. They always are. They're not going to make it easy for me because it's my last day for a week or so. But we'll be looking forward to looking for some good opportunities as usual. Fridays, I like to make a little bit of money and call it a day. Gonna say hello to everybody this morning. Good morning, Rick. First one in the room. You are the early bird this morning. You win the prize. Katie Lay. Good morning. I don't know, KD. Ilay, whatever your name is. I'm sorry if I'm killing it here. Dr. VJ, good morning. Chris, OPEX Friday. We've got Chris asking Rick where the all right is. Rick is not apparently channeling his inner Matthew McConaughey this morning. Good morning, Brian, Nico, Zarain, Marek, George, Michael, Harry, Frederico, Subconscious, Vince, good morning, James P. There it is. Oops, all right. Yes, thank God it's Friday, right? And George, good morning. Ricardo, Alfred, Three Lions Insight, good morning, guys and gals. Yeah, so, again, not going to be here next week. No forecast, no recap. We're coming back that Monday after Thanksgiving. I'll be back on the 1st of December. So the first Monday and Tuesday, the week after next, Dan will be doing the forecast for us. And I'll be looking forward to getting back to business on December 1st. Working for a couple of weeks and then working probably not for a couple of weeks near the end of the year. Always like to take a little bit of time off. It is so important to do so. Get a look away from the markets, come back to the beginning of the year with fresh eyes. And patience, always thinking patience. I tend to think I like to get a good start to the year, and that has pushed me into some probably secondary and lesser trades early in the year. I got to remind myself, it's a whole year we've got, and a whole new book for the year. Finishing this week's chapter of this year's book today. Let's have a look at the charts. So, as always, starting from left to right, no particular order, just starting with the crude oil. Don't forget, we are trading January crude. We've had some questions, some range-bound activity. We've broken out below that range-bound activity. We lost 30,000 in open interest yesterday, but 38,000 of that was in the expiring contract. We actually added 8,000 in open interest yesterday on an overlapping to lower, but an upside day. This morning, we're opening below the important inflection level. That is the weekly kickoff level, 77.25. We've got quite a gap. We've got medium time frame downside structure now maintaining. We've been putting in lower highs, putting in lower lows, and we're continuing on that now. The breakout below the weekly kickoff low was in extended trading hours. So again, we're going to have a substantial gap to deal with. There is lots of space down to this swing low here, 74.25. There's also a naked point of control down there. So there is lots of space for this market to continue to move to the downside. It all depends on if the longer time frame adjusts inventory, as we would think they would be doing. That's what these weekly kickoff levels are created for, is for a kind of a hint or a clue at where the longer time frame may be forced to adjust inventory. Now, we're pretty much through with rollover. I would say today might be a pretty good day for them to re-enter the directional activity in the crude oil. Rollover was the rollover range here. We started to head down towards weekly kickoff low, and acceptance of weekly kickoff low certainly gives us the opportunity and the space to again come back down to the swing low back here on the 7th of October. 74.25. Here's the 30-minute chart. Settlement all the way up here at 78.41. You could then assume that there is an overnight inventory to the short side. If the market opens in regular trading hours, and we're going to try and catch that first minute opening range, because opening out of range and out of balance increases the probability that it could be a useful opening range trade. So we're going to be looking for, if I'm short here, I'm looking for when the U.S. market opens at 8 o'clock, the regular trading hours, I'm going to be looking for continuation. I'm going to be looking for sellers to come in and continue to push price lower. If it doesn't happen, we could see a move back towards weekly kickoff low, which to me would be a welcomed opportunity because it allows me to get an execution and also manage risk very well to a gap close, perhaps. I don't, not really seeing it coming all the way back up to settlement. But that said, watch and see that if that's what's going to happen. So we'll watch the opening range trade when we start getting closer to that 8 o'clock level. For now, let's look into the S&Ps. Okay, so this is the daily, get a little bit of a closer look at it here. Really strong auction up to this level. The auctioneer pandering yesterday and an attempted move up to that big fat round weekly kickoff level of 47.10, which has provided some opportunity in May again today. We only lost 900 in open interest. So the market still seems to be eating up shorts as the market continues to try and push up to this level. Volume was pretty good yesterday, not bad, 2% higher in the New York Stock Exchange as well. So volume maintaining and even building up at this level indicates there's likely change coming here. We're kind of range bound here, but change is on the way. Last night we put in a new all-time high in the extended trading hour session. As we all know, the market does not like to leave all-time highs in the overnight session. So we've got that to think about in the back of our heads today, but remind yourselves to trade what you see, trade what the market is telling you. Where is the longer time frame? We didn't bring them in yesterday. Are we going to bring them into the marketplace today? 30-minute chart. Okay, so here's our all-time high last night, above 47.10. We've really yet to have much activity above that 47.10 level in regular trading hours. But unfortunately, we're back in range and in value. That tells us to stay a little patient. Are we a little bit short here? Probably. But here we are in range, in value. We've hardly moved for the better part of this week. Still relatively range bound and short time frame, indicating short time frame control. I'll be watching Delta today to see if there's any Delta divergence. Like if we keep pushing higher and Delta is decreasing in value, that may indicate that we've brought in some new business to the upside. But that's what it's going to take to keep this market moving to the upside, is new business coming in and continuing to push to the upside. And we always do seem to get a little bit of help from the shorts that are always looking for the big move to the downside. And we've seen our share of P-shaped profiles. Here's a P-shaped profile indicating short covering. And that's substantiated by a loss in open interest, but only 900. Here's another P-shaped profile. As we keep getting closer to this level, shorts keep getting squeezed. Shorts keep getting squeezed. If we can bring ourselves up against that level and force the longer time frame to adjust inventory, then we may see a decent breakout. Are we maybe in an area of repair? Possibly. We've got point of control up here, which I'm going to call it 47.02. And we've got a couple of high volume nodes down here. We've just traded down to them in the overnight. But if we open between them, there's a pretty good probability that one or both of these high volume nodes are going to be checked. The lower one here, 46.79. Right. So let's begin in the Nasdaq now, and then we'll go watch the open here in crude oil. All right. So the Nasdaq's a little bit of a different story. I mean, the Nasdaq has broken out above that weekly kickoff level, the big fat round number of what was that high? 16,500. We looked above it yesterday, couldn't close above it, looking above it now, and looking to open above it. So our overnight high in the Nasdaq is less likely to hold than the overnight high in the S&Ps. The S&Ps still wrestling with that inflection level. What was it? 47.10. New highs and overnight, big fat round number. Regular trading hours don't like to leave all-time highs in the extended trading hours. Shorts scared out yesterday. We lost 3,200 in open interest on higher volume. We squeezed a lot of shorts out yesterday, which tends to bring buying power away from the marketplace. So we are looking for new business to keep this market moving to the upside. Take a look at the 30. Okay, we're just about to open crude. We'll go check that chart here very shortly. We've got a gap here in Nasdaq. Remember the S&P's inside value with a little bit of short inventory. Nasdaq's long inventory, but above an important inflection level. If we can't close the gap, we're going to be looking for opportunities to go in the direction of the gap, which would have price looking higher. But a move back down to the gap takes us back to this important big fat round number of 16,500, which could be another decent opportunity for us to find an execution and to limit risk. Let's go see what's going on in the crude oil open. One minute. This was yesterday's open. Getting a little bit of a push here. Okay, so opening range high. Let me pull this up here. Opening range high. Now we've broken out the downside. So if we're playing the opening range trade, we're short one tick below the low of the opening range. The high of the opening range is 76.17. Low of the opening range, 76.09. So not a huge opening range. Oh, yeah, that's a pretty big opening range. So if we are short, the real point of failure is the other side of the opening range. So pretty big opening range, pretty big risk on this. But if the market does continue to push lower, if we do see longer time frame sellers continuing to push this market down, it could be a substantial profit. You don't necessarily have to take all that risk, but if you move your stop closer, sometimes the market will come back to the opening range and then run. If it can't hold the high of the opening range, that may provide another opportunity to go up and close the gap. So right now, the opening range, the high of the session in the S&Ps. Let's go back to the Nasdaq here briefly. So if we were to return to value in the Nasdaq, if we come back down and we reaccept inside value, which is basically back below our big fat round number here in the Nasdaq, the weekly kickoff high, if we accept, that's a value area special situation play, and that may indicate that the market is, with a certain degree of probability, like to rotate all the way back to the low of value from the previous session. So acceptance, which is subjective, back inside value could bring price all the way back down to low of value from yesterday. It would be a pretty substantial failure above our weekly kickoff high here. Anything is possible, but it's as far as high volume nodes. I mean, we're looking at point of control, of course, 16,470. The one right in the middle here, 16,439. And one down here near our value low, let's just say that's 16,390, let's call it. And as for upside, there is no past reference. These are all-time highs. Gold. Okay, this is the daily. Gold remains range-bound. Volume's slowing. Open interest, we lost to 800 estimated yesterday. So no big shakes as far as new business coming into this market. But as volume continues to get cut off, and we are coming into rollover, which is next week. So that might be one of the reasons why we're seeing volume starting to slow in the December contract. We'll be moving to February, I think on Tuesday or Wednesday of next week. So make sure you pay attention to that. We've got rollover in the Nasdaq as well, and interest rates as well. So Tuesday, Wednesday next week, likely to be pretty quiet, and it's going to be rollover for all those products. Maybe take a little time away. But anyways, short time frame control, balance, volume, slowing, open interest, pretty much moot yesterday. I'm playing balance rules right here, and I'm looking for the extremes for my executions. And we can see right here, I mean, price is largely at center court. If this was a tennis player, he would be standing in the center looking for the opportunity to play either side, but he's just resting right here. He's just waiting to see which side the ball goes to so he can come and hit it back. Take a look at the 30-minute chart. Aaron, value would be all trading done during regular session trading hours, correct? Well, value is considered 70% of the time or the volume in the regular trading hour session. So what we're looking at here is the regular trading hour session from yesterday in gold. Here's the range. 70% of the time or volume was spent between this red line and this red line. So 70% of the volume was between here and here. That's where we get the value area. So right now we opened in value. Well, we opened at the high of value. We tested the low of value. We're back testing the high of value. This is the 30-minute chart. Initially, the high of the opening range was the high of the session. I tend to mark those on my charts. So that high of that session was, I think it was 1866.90 or 1867. We've now taken it out. But because we opened in range and value and the opening range was rather substantial, I didn't do anything. So now I'm just kind of sitting here waiting for the next opportunity. And, to me, from where I'm sitting, this point of control that has not been checked in regular trading hours is one of the extremes. Last week's high perhaps could be used as one of the extremes. So I'm just going to be sitting here and just kind of watching and looking for the next opportunity. I don't see anything huge going on here today. All right. The euro. So yesterday, kind of low volume on this pullback from the low. We lost 1,500 in open interest. So a little bit of short covering we could look at as yesterday. Some people probably taking some profits off. Some shorts probably stuck in the hole down here, joining into that. The dollar strength brings European session sellers. We'll see this on the 30-minute chart. As soon as the London session opened up, wham! There's lots of worry about potential widespread shutdowns closing the economies over there in England. So this is an interesting situation, however unfortunate. Weekly kickoff now in play. I mean, we're dancing right around it right now. So the opening range so far, the low of the regular trading hour session, taking price back to the weekly kickoff low, which offers some degree of opportunity. We have a lot of shorts in this market. We're not seeing sellers coming into this market, so our shorts are starting to get a little bit nervous. We got a gap, so if we can't get this gap closed relatively early, we still are looking for shorts. But if we close the gap, that's going to change things and bring us back into this area of balance. And just have to reassess what happens after that. Okay, if we continue the move to the downside, this right here is a swing low from back in June of 2020. And there is space for us to get there, but rarely are we going to take a straight line. Take a look at the 10-year and the nat gas. So the rates on the 10-year took a real good dive last night. Obviously, that's bringing the price for the Treasuries higher. We had a pretty decent look close to weekly kickoff low this week. We weren't able to accept below it. The market turns, rates turn, low volume here near the weekly kickoff low. We also have to understand that it is coming into rollover, and volume is going to be a little bit blurry, as well as open interest. We lost 4,500 in open interest on this small up day here yesterday. That's not a big change in open interest for the 10 years, but there it is. There it remains. Take a look at the 30-minute. Not much of a chance of us to close this gap, is there? We got a lot of longs in this market. Settlement is here, 130.18.5. Here's the London session. When that London session hit and things started to get shaken up over there, it shook everything up here to some degree. Big move to the upside. Rates dropped. Price rises. Where are we looking? Well, we've got gap. So if we can't close the gap, we're looking for opportunities to trade to the upside. It's going to be a tough trade today for me to do that. I have a hard time buying higher, but sometimes that's exactly the right thing to do. But we do know that we have a lot of longs here. If we lose this momentum and those longs from overnight get nervous, I could certainly see a pullback to at least this naked point of control that's been passed over, if you will, in regular trading hour session. Take a look now into the natural gas, which I'm really glad we added the natural gas. It's a fascinating market. I'm learning a lot about it. Okay, so 7th day imbalance, short time frame control. Again, the tennis player is centrally located. He's looking for what the next move is going to be. Is the ball going to come up here? I got to go get it. If the ball's going to come down here, I got to go get it. Volume slowing, again, partially due to the rollover. That is, again, next week. Open interest, we added 700 yesterday. Not a big move, somewhat moot. Take a look at the 30-minute chart. And we'll be done shortly here. So the 30-minute chart, mixed overnight inventory, largely still in range, still in value, still chilling, not looking for anything in the middle of the range here. And going to be just kind of stalking. That's what we do. If there's nothing to do right now, we stalk. We'll see if we can't find a three-legged gazelle at some point today. Okay. 1 second. Okay. So, got a couple of questions here. Norman. Hi, Norman. How are you? When you worked in the pit, how many contracts did you work with in a day? Hundreds, thousands? Well, it depends. As a local trader trading my own, I never really got much bigger than a 5 lot. That was a lot. I never got to the point where I had the intestinal fortitude to take risks much bigger than that. And I asked my dad about it. I said, what if I don't get bigger than a 5 lot? He says, known a lot of guys who've gotten real rich trading 5 lots. You don't have to trade big. You just have to watch the risk, manage the risk. But as a broker, I mean, there were days that I'd fill 10, 15,000 contracts. You get a customer that comes and says, I got 3,000 big S&Ps to sell. Just piece them out over the day and let me know what you do at the end. Okay. John, does London session start at 1 or 2? 2 Central, from what I understand it. 2 o'clock Central. On the sidelines, watching the Build Back Broke voting fiasco. Yeah, it certainly is a fiasco, isn't it? All right. So, well, we're a little early here. That's okay. Let's take our deep breath. Be humble, grateful, and creative in your trading today. I don't know about you, but I'm going to try and make a little bit of money and start my vacation early. I'll be praying for all of us over the Thanksgiving. Make sure you count your blessings over Thanksgiving. Be good to yourselves. Be good to each other. And when I give thanks for all of you, I'm going to give thanks twice. All right, so let's finish the week strong, like the title says, on a high note, and enjoy next week. Take some time off. Take some time off. Look away from the markets for a little while. I find that doing that sometimes, when you get back, things just seem a little bit more clear. We get so wrapped up in how important trading is and how important it is to us, and it's money, it's money. That's why it's so emotional. So again, blessings to all of you. God bless the USA, and have a great Thanksgiving week. I will see you on December 1st. Seems like a long time. Seems like a long ways away. It's going to happen faster than I think, but I'm going to be very happy to be back with you when we do get back together. So, again, have a blessed holiday, and we'll see you in about a week and a half. Trade well.